Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, today is really the day of short covering bounce, because if you take a look at a couple of European markets, they're actually down a bit. So today we have sort of decoupled from the other side, which is good from the bulls point of view. ICICI Bank is now leading that move on the bank nifty. Perhaps that's where you had highest amount of shorts. Along with that, let's just pull out State Bank of India as well. So these were two stocks which saw a lot of shorting over the last few days, and that's where you were seeing quite a bit of move as well. Ashwani Gujral and Mitesh Thakkar with us for BTST calls. So Ashwani, this of course part of it is short covering, but you reckon it could extend tomorrow as well, and what would be the stock calls now?
See, even in the worst of bear markets, markets go higher. So let's not say that now the markets will never go up, but one thing is clear, that what is moving up is quality. Don't expect major short covering in poor quality stocks or in second, third rungers, because that is where the quality of the bounce may not be too much. Like State Bank is up almost 4%, but the other PSU banks are not. So going by that, I think it's a good idea that people can buy HDFC Bank with a stop at about 1830. Look for targets of 1875. HDFC is a buy with a stop of 1770, target of 1810. And Federal Bank is a buy with a stop of 90, target of 102. And the interesting thing is that the IT index is now in the negative. So where shorts are not there, that is probably coming off. So that way it will be a fairly sideways and choppy kind of market. So not very easy to trade. So make sure you are in quality and in spaces which got smashed up.
Sure, that point's taken, Ashwani. Mitesh, let's get your ideas going as well.
So I have a BTST on Hero Motors with a stop at 35.63. Look for targets close to about 36.10. And Asian Paints, that's doing well. That's a BTST with a stop at 11.17 for targets close to about 11.40.
Okay, so a couple of ideas are coming in on the buy side. Anuj, of course, you had said this in the morning that today is a day that perhaps is a day when the bears will be forced to at least cover some of their shorts. That's how it's played out. Where does it leave us, though? I mean, is there any more clarity that this could power through tomorrow as well, or I mean, hard to say now?
No, it looked like this morning you'll have a short covering bounce. As we speak, there's been a bit of a nick as well from the high
there's
point.
Some selling also now that's coming back.
The problem for this market is that now every time it will see recovery, it will there would be selling as well. I think as we discussed earlier as well, the message of today's move is that there would be some fight around the 200-day moving average. Whether it gives way or not, this reminds me of the first correction that we had in the last bull market. I distinctly remember that when you tried to take support at the 200-day moving average 3 or 4 times before finally breaking that. And even though you went below that, it was still a bull market correction where the market after that had a strong bounce as well. And you're very close to March end as well. And in general, the feedback I'm getting is talking to fund managers as well, and even the foreign fund managers, that this is a problem which should be over by March 31, and technical factors would be out of the way. So, but till then, there would be a fight around the 200-day moving average. That is one level which, at least in the near term, would be defended.
Okay, well, that's the market for you today. We also have Prakash Diwan joining us in the conversation this afternoon. Prakash, simple question. Is this a sell on rally market? The kind of rally that we're seeing right now, would you expect, selling to come through?
Absolutely. I think this has been a little bit of a relief for people who probably thought, they could have booked profits at higher end. And for all the momentum could continue. So the volatility till about middle of this month will be severe. So you'll get these wild swings both sides, but the texture of the market continues to be very vulnerable, Surbhi. And then particularly when you see the way the mid caps and small caps react, they don't participate when there's a pullback as much as they participate on the downside. So very clearly there's a overarching willingness to book profits from most large institutional investors, be it FIs, be it DIs, or at least some of the small cap, mid cap counters. The Nifty probably presents a very different impression of sorts. Optically, it looks like very healthy right now. It's thanks probably to the Bank Nifty's participation, which was missing out earlier. And remember, today's Thursday again. Bank Nifty option expiry. A lot of those things kind of do add up. But my sense is that it pays to book profits, sit on cash. wait for the global market also to kind of give you some sort of consolidated negative moves, and buy when valuations are not unfavorable from a risk reward perspective. So cherry pick, but don't be in a hurry to start buying right now.
Okay, cherry pick. So what would be 2 or 3 picks then?
So I continue to talk about the same stocks that looked good at let's say 600. They look good at 650. So this is a company called Godrej Agrovet. We briefly spoke about it some time back. We spoke about a very small company called Kirloskar Ferrous. So what's happening is, Anuj, the cycles that are fairly secular in trend, whether it's the steel cycle or the auto cycle, they continue to be undisturbed of sorts. And within that, you would have to find companies which are participating much more wholeheartedly and which are more strongly correlated with the OEM growth, or in the steel cycle, for example, if you see a small company called Sunflag. Now this also supplies automotive steels, which is a big growth area for most steel players in India, and that came all the way to closer to $100, came down to, I don't know what it is today, but in the 80s. It doesn't lose ground very easily. There's a lot of delivery buying that keeps on happening. And as a matter of disclosure, I have it in my portfolio from a long-term perspective also. We are talking about steel, chemicals, to a large extent fertilizers, which would probably be very, very promising. So, be it a Chambal, be it an RCF, they're very promising stories that are still available.
A little bit of a cool off from the top, and some of the stocks that are contributing to it are from the IT space. So for instance, Infosys, which is now looking at a bit of a drop from the day's high. TCS has been struggling as well, down about 1%. So IT is kind of out of favor in today's market. Mitesh, let me get your thoughts on this. I mean, should one be using these dips to buy into these names?
See, I think IT did very well when the market was correcting and the stocks were quite high. I think they're giving a pullback. I would want to wait for another 1-2 days when the pullback will play out nicely. But I'm still quite bullish on Mindtree, TCS, etc. So I think clearly I'm a buyer, but not immediately.
Okay, not immediately. By the way, just pull out BEML. It all has now given up that entire rally that happened on that day when the news was misrepresented, and that big 10-15% move. But from the lows, there's been a bit of a recovery, like as it's been for the market as well. At 1140 on BEML, Prakash.
So, the rise somehow seemed a bit weak to justify, and the fall definitely kind of corrects itself. My sense is it would still find difficult to kind of move up from here. In fact, out of the BEML twins, I definitely still like BEL, because there's still a huge pending order backlog that's likely to come its way, and they are probably going to benefit with the election season coming in a significant way as well. So there are positive headwinds for that. BEML, I haven't really seen any fundamental change that would trigger some sort of a buying interest.
Okay, fair enough. By the way, if you're looking at PSU banks, then some of them have managed to recover from the lows. In fact, are in green, the likes of UCO, Canada, mild green ticks in these stocks. But the one that's been completely singled out today is IDBI Bank, which is down almost 5%. Prakash, thoughts on IDBI Bank? It's gone all over the place. It's the one stock that will never move along with the PSU pack. So,
I know,
what's the approach?
When it was around 72 a couple of weeks back, and I remember Anuj asking me this in the morning show, and I said, except for market whispers, I haven't come across any change. And just because it's out of the banking purview, and the government can probably divest out of it quickly, made it a very suitable candidate. But beyond that, and there were some names from Singapore, some banking entities from the Asian markets, which were touted. But fundamentally, if you see, it's a stretch in terms of you're paying such a rich price, and somebody talking about triple-digit now valuations itself is a little bit of a stretch. So at 70, 72, it rallied, and then probably we felt a bit left out of sorts. But I'm glad we didn't give out a buy call, because it would have been very volatile and disappointing for a lot of people. It's still an avoid, even if it comes down.
Okay, Ashwani, so 24,400 on the bank Nifty and 10,230 on the Nifty. For this pullback rally, which you believe could be 3 or 4 day affair, what are the next levels to watch out for there? Do you get a sense that the bank Nifty could actually now make a move towards 200-day moving average and face resistance there?
That's hardly, I think, 350 points from here. That can happen, may not be 350 in one day, 100, 150, that type of move. But it's clear that, it is a pullback move, because what was an uptrend is going down. What was in a downtrend is seeing short covering. So don't get overexcited with this. But definitely from a sell on rally, today we have shifted to buy on dip for whatever it's worth. And on the Nifty, I think once we can get past 270, then maybe a larger rally could be in place, maybe till 10,400, 450. But it will be fairly choppy and extremely tough to trade.
Okay, fair point. Anuj, so we're winding down now to 2.5 minutes left. I guess we should expect more of this maybe tomorrow, because it's anyway end of the week. And as Ashwani is also pointing out that things aren't very clear. We seem to be in a trading band, would you say?
Yeah, I mean, let's see. It's yesterday we went near the 200-day moving average, we bounced back. Today we went near the 200-day moving average, we have bounced back, and this bounce back has sustained. Yesterday's bounce back didn't really sustain that way. So obviously, and now the 200 is also rising. It's a rising 200-day moving average. So perhaps you now move to 10,130. Now the obvious call that people would take is that your risk reward is, your risk is 100 points, right? The 200 is 100 points away. The risk is 100 points, and pullback could be 400, 500 points. That trade could work out, may not work out. Let's see, Surabhi. There are too many moving pieces right now. But for today, of course, it was a good day, and in particular for the banks, that's where the short covering bounce was the biggest, and in particular ICICI and SBI, the two beaten down stocks in the large cap space. SBI is going home with 4% gains. ICICI Bank is going home with 3.5% gains. So obviously that was the space where you saw maximum amount of covering. In fact, Reliance as well was up 2%. HDFC was up 2%. Axis was up about 1.5%. Infosys was up about 1%, though the rest of the IT pack didn't really participate as much. On the way down, Sun Pharma 2.5% lower. That it's been a one-way move on Sun Pharma ever since those clarifications on Halol. A lot of good news got priced in, and after that it's been just a downward journey for that one. Tata Steel down 2%, Yes down about 1%, Yes Bank that is, though it recovered quite a bit from the low point. The low was sub 300 and it's ending at 308, so there was quite a bit of recovery in Yes Bank, but still in the red. And TCS of course was down about 1%, so it'll be mid-caps underperformed today, but still from the low point quite a bit of recovery.
That's true, and really, all kinds of stocks moving around. In fact, as we are closing out, something like EIH suddenly up 5.5%, 6%. Trent is up 8%. I mean, these are not the usual names that we talk about. Purvankara is up 8%. So beyond the headline index, I mean, there was a lot moving beneath the surface. DFM Foods, makers of cracks, 7% up on that stock as well. If you talk about, of course, the more known names, it's been a great day for Ashok Leyland. Fresh 52-week highs continuing on that stock. Radico Khaitan was trying to undo some of the damage of what we saw earlier in the week. So there's a big 5% move up on Radico as well that we've seen today. If you talk about what else worked, then a couple of these names where resolution is in sight, for instance, Bhushan Steel, Amtech Auto, and again Castex from the same group. All of these stocks have had handsome gains today. Bhushan in double digits, 18% thereabouts and counting. Banks were a mixed picture. So you've got some names like Federal Bank, great day for that one, 4% up. Then a couple of others like Bank of Maharashtra having a decent run today. Canara, UCO somewhere muddling along in between with about a 1% up move. The outlier was IDBI Bank on the downside today, about a 5% crack coming in on IDBI as we've just closed out the day now. I mean, that's 6% almost on IDBI Bank. What else worked out for the market on NBFCs? Good day for Mannapuram, decent for Edelweiss with a 2% up move. But again, DHFL, for instance, didn't participate in the rally. So very mixed on the NBFC side as well, down about 2% on DHFL. Finally, I would like to end off with the real stocks of the day, so to speak, and that's PFC, REC and PTC for the amount of volatility that we've seen on these. So PFC is still going home with a cut of 3.5%. REC is on the lower side of the screen as well. On PTC, there has been some recovery, quite a bit of, in fact, recovery from the lows of the day. Stock is down only 1.5%. It was down almost 6-7% when we began this show. So that's something to keep in mind. Sugar, by the way, continues to be, a sour spot, if I could say that. Balrampur, Triveni, Dhampur, lots of those names down quite a bit once again today. So Anuj, I guess it's very mixed trends across the mid-cap market.
Oh yes, mixed trend quite clearly, and there was some underperformance. In fact, advanced decline still ended in favor of the declines. Prakash, your thoughts on Sun Pharma now?
No, in fact, I was quite surprised with the kind of lashing that it's got, in spite of those three observations, seemingly not something that they can't remedy out of. And then my sense is the market is probably weaving in a scenario where it would take about 4 to 6 months for those to be completely cleared out and the production to start finding its way to the US markets. And till that happens, they continue to lose a lot of precious market share is what the summarizing this thing is, and that's exactly where people are not willing to buy into Sun Pharma at this stage, and probably wait it out till things start turning very decisively. So I would believe it would now be in a time correction of sorts, more than a price correction beyond this level. I mean, you could probably see 4-5% off, but it'll probably be a slightly longer time correction that it could go through before the revival happens.
Okay, Ashwani, any final piece of advice for tomorrow, Friday trade? Oh, okay, I don't think we have that link through with Ashwani, so we will have to wait till tomorrow morning to get fresh ideas going with him. Gentlemen, thank you very much for being with us and taking us through market close. We need to take a quick break, but before we do that, in what is touted as one of the biggest banking IPOs in recent times, Bandhan Bank is all set to go public soon, over 2 years after it began operations as a bank. In a chat with CNBC TV18's Ritu Singh, CEO Chandrasekhar Ghosh talks about the bank and what the plans are ahead with respect to the 4,500 crore rupees that they are raising.
You see that there is 2-3 factors in here. One factor is there that this is a compliance. I must be listing within 3 years. Otherwise, I have the 24% capital adequacy. In that sense, the capital is good.
Yeah.
Second point is there, as per SEBI rule, I must be 10% offered.
Yeah.
So I cannot below that. So these are the two factors. As a third factor is my investor, existing investor. They are also not like to sell their share. So that in the all together, I have need to this money. I hope that after the IPO, we can be use this money for business growth and in the many way on that.
So largely you've been an MFI lender. What are the verticals in which you'd like to grow from here? I mean, will it be affordable housing? Will it be gold? Will it be some other areas that you look to enter? What will be the expansion routes?
We are feeling that there is a market. No, we have that capacity and market. Both can be like to given these opportunities to grow further. We'll continue this microfinance, whatever we are growing, in the same way we are trying on that. Second point is a non-microfinance. There is an MSME segment is a huge market in India. We like to focus on that area. We have that the affordable housing. There is a good market in here. We like to give. If we say that we have the 10 million customer, the microfinance, and the 1% of this customer have been given the good shelter, who have the income stability is there. There's a big market. We can give on that. And third one is then the people urgently have need the money going to other way. So why not I can be reduce the dependency from money lenders, give the gold loan offer to them, and they also like to use that money for the bank. So these are the three major focus we can be like to fix up in the future.
Power Minister has said that State Bank of India is worried about its exposure to the Mundra power projects of both Adani as well as Tata Power. We caught up with the Deputy MD of SBI, Sunil Srivastava, who also acknowledged that the entire banking system is facing problems with respect to the power sector.
Power is a stress sector for the banking system as such, not only State Bank of India. There are quite a few power plants which are yet in the process of implementation, but post February 12th circular of the Reserve Bank of India, there will be very little leeway for the banks except to recognize them as NPAs and to find a resolution plan within the next 180 days, which ends in August or perhaps in September, as the case may be. But during that period, to resolve all the issues in the power sector, where there is on the one hand we are told that there is excess supply and therefore we do not need power. And on the other hand, we see the daily prices in the energy exchanges where power is being traded creeping up higher and higher. So there is obviously a problem related to distribution, and there is obviously a problem related to DISCOM's health. Now, these all issues have to be addressed in a very comprehensive manner. And addressing these issues in a short possible time of 6 months is going to be very, very difficult. There are identified around 34 power plants in the thermal sector which are undergoing some stress. There are still a few power plants which are under implementation, partly completed. Obviously, if these are not addressed, they will have to be classified. So they may be partly operational but not have been fully completed. So we have instances of that. There are plants which are completed but they have no PPAs. There are plants which are completed with PPAs but the FSAs are not there, or the coal blocks have been cancelled. And there are plants where because of change in law or force majeure clauses, as the case may be, the tariff revision is not accommodative enough to address it is a revenue shortfall for them.
All right, we also spoke with PB Ramesh, CMD of REC. He told us that the company has the lowest gross NPA levels amongst pure power financiers. Listen in.
There is absolutely no stress. In my loan book, speaking for REC, 85% of our lending is to the state sector or to the central PSUs. And none of those assets are stressed. If you look at any of the financing institutions, we have the lowest NPAs. I mean, the gross of 2.9% and the net of 2%. Now, this is among the lowest, and this Reserve Bank of India guidelines certainly would have an impact, but that would not be substantial. We have already provisioned.
Now, let's get you that big CNBC TV18 exclusive as promised. We spoke with Venugopal Dhoot, chairman of Videocon. He says that the cancellation of their telecom license is what led to the debt problems at the company. He says that they have submitted loan repayment plans to bankers. Take a look.
We think that there is no fault from our side. Our telecom license has been cancelled, and that's why we came into this position. But we don't want bank to make any loss. We have given all plan to repay all of our money to the bank. So on this point we have gone, and we are quite hopeful that we will be able to convince bank also and the court also that we are solvent company. Company is having domestic and foreign debt together is only 20,000 crore rupees on Videocon International Limited. I'm quite sure bank will not be required to take any haircut because our brand is very valuable. We are having properties worth around 7,000 crore rupees, and we are having a lot of other assets also.
And until that bill is signed and we see reactions from others, the volumes, of course, have been impacted as well, and so have been the prices in that sense. It is also about the strength in US dollar, increase in warehouses inventories for many of those metals. That also seems to be pulling the prices down. Robin Bhar, head of metals research at Society General, now joins us on the phone line to discuss more about that sector. Robin, hi, good to have you. What is your sense? Because there is just so much happening in the global markets, and all of that is putting pressure on prices. Let's start with the US import tariff. First of all, what is your sense on that? How much of an impact can we have from this one?
Yes, hi there, and thank you for having me. Clearly, markets are worried about intensification of the global trade wars if President Trump signs into legislation his proposed tariffs on steel and aluminium. That would unleash retaliatory action from the US's main trading partners, and this is what's bothering the markets right now, because as we've seen, whenever there's rising protectionism, trade wars, that often leads to weaker global growth, and that would undermine metals demand at a time when the second quarter traditionally sees a pickup in industrial activity globally, and we see the peak seasonal demand for metals ranging from aluminium through to zinc. So it is a worrying time. Hopefully things won't escalate. Maybe President Trump views likely tariffs on steel and aluminium perhaps as a bargaining chip. The NAFTA negotiations are taking place with Mexico and Canada. Maybe he's using this as a threat to try and wrangle some more concessions from the Canadians and the Mexicans. difficult to know with any precision. I think we're going to have to wait and see. But yeah, worrying times for the metal markets for sure.
That point is well taken. So what is your sense? While of course these are near-term trends and the markets have reacted in not such a positive way to that, but next quarter when it starts is known as a seasonally strong demand quarter. Do you see markets withstanding that? I mean, do you see markets going back in strength as we get into the new quarter?
Yes, we do. That would be our base case scenario, where if we look at the micro factors, that would be supply demand remaining broadly balanced, moving into deficit generally, inventories continuing to trend lower, some tightness appearing on the nearby spreads, indicating maybe a shortfall in supply, because we've not had much investment on the supply side, bearing in mind that prices had been falling from 2011 through to the end of 2015. So a lot of capex had been cut. Sustaining capex also had been cut as well. So we've not seen much investment on the supply side at a time when demand has picked up, and that we would view is likely to continue. China is showing stability. There is growth outside of China coming through. So the micro factors we think remain positive, but of course it's not just the micro factors that drive commodities, it's the macro factors, as has been discussed, the dollar, global growth, trade war threats, and so on. So the weaker dollar probably helping to support commodities, as that's been a casualty of some of the recent risk aversion. But the other factors like the volatility, the VIX, global equity markets are all lower. So clearly the macro factors are driving the metal prices and ignoring for the time being some of the very positive micro factors that we've just talked about.
Robin, so if you had to look at that in sense of prices, what is your sense? If if you take in the worst case scenario, how much of further decline would you see in the metals from here? And of course, looking at the micro strong demand supply fundamentals that you just spoke about, how much of an upside do we have from here?
Assuming that the trade wars do not intensify, that Trump doesn't want to escalate the current spat between the US and its trading partners, if we assume that it all washes over, then we could see maybe 10-15% upside from here as we move through the second quarter. Obviously, all bets are off. If the trade wars escalate, we could see a 20% decline in metal prices. But that's not our base case. That would be a worst case scenario. I repeat, under our base case scenario, we are still positive, and we do see some upside as we gradually enter the second quarter and see physical demand picking up in line with this synchronized upswing in the global economy.
Point taken, Robin. We'll let you go at that. Well, that's a view coming in from Society General that there is a risk and reward situation here depending on how the situation or the events turn out in the global markets. Best case that you have 10 to 15% on the strength from here. But if there is intensification of the global trade wars, then the prices can fall as much as well. T. Gnansekar, Director of Comtrends, now joins us to talk about strategies there. And Gnansekar, hi, what is your own sense on metals? Today clearly has been a very, very bearish day. Anything that you see worthy of buying, or would you be cautious, wait on the sidelines, wait for some more development?
Manisha, the charts have turned really bearish for many of these base metals, and it's exactly the opposite. I'd be looking to sell on any upticks from here. Especially zinc, because it's coming off from a 15-year high, and then the inventories have started climbing from a 2-year low. So all this clearly is hinting towards much more upside, specifically in metals.
Clearly, we've lost his feet and we'll try to get him back. But that's exactly the viewpoint coming in from Gnansekar as well, that it is about the global markets and that has turned the charts bearish, especially for many of those metals. We are turning on a multi-month lows for many of those base metal prices there. If you look at the Indian markets as well, it actually is looking at 2 to 3 month lows on many of those metals. Gnansekar, if we have you back, what is your sense? I mean, if you had to put it in two categories, what is looking more bearish and where do you see a buying opportunity?
I think we should wait for any kind of a buying opportunity. In the middle of a downtrend here, and like the other guest mentioned, if there is no escalation in the tariff war that is going on, then I guess there could be some bargain hunting which might come in, which again is a lot of ifs and buts. So at this point in time, I think the trend is a friend. So I guess the downtrend is clearly favoring any kind of optics to be sold. So if at all I'm looking at a possible buying opportunity, it could be nickel and not at present levels, maybe 5% lower from here.
What's your sense also for the precious metal prices? Because even as the gold prices seem to be holding their ground, it is silver which really hasn't been able to cross that 16.5 mark.
Well, interesting because silver. If you look at the gold-silver ratio, it's hitting a high range of 80s, which becomes very unsustainable. Which means that silver is extremely undervalued. So at any point in time, you can expect a rally in silver. But then the problem is, you need to really have some patience. But it can reward you a lot if you have that kind of patience. That's how silver is.
All right, so these are very, very trying markets right now. We'll let you go at that, Gnansekar. Thank you so much for coming by and giving us those strategies and numbers. With that, completely out of time on this edition of Closing Bell.